G'day folks, it's Johnny Seville from Acorn Wealth here, and this is your executive summary for stock setups for Friday, last day of the week. And of course, the market is just continuing to try and edge higher, but we are getting into thin trading territory here, folks. We've got 1 week left until the open range, which began on the 2nd. One of our smart money signals told us to go bullish on the market on the 2nd. That is meant to remain bullish until the 20th. However, what that simply means is that we should close around the range of Monday, October 2nd. It doesn't mean we can't go down from here. Let me just take all these other things off the chart. Basically, the high and the low of Monday, October 2nd is where the market should close within or above by next Thursday. And that's when, and then we get the new open range smart money signal on the 20th. So that doesn't mean we can't go down from here. So we are getting into very choppy territory, and I would not be surprised if we get a pullback soon. Let's have a look at the stocks above the 50-day moving average. This is, of course, the stocks above or below their 50-day moving average as a percentage. Over the last 7 years, 7+ years, we have always broken down from this level either immediately or within 3 weeks, 3 to 4 weeks. 100% of the time over the last 7.5 years, this has told us we break down from here. 100% accuracy. I mean, that's crazy. So we certainly, whether it's going to be this week or whether it's within the next 2-3 weeks, you sure as hell better be planning for a storm because things are getting windy. Now, what else I think is a very important thing to look at, which we talked about in our trading room tonight. High yield bonds. High yield bonds, of course, indicate whether smart money is buying corporate debt or whether they're not buying corporate debt. So lightning round of the analysis I did tonight. Let me show you this. So, okay, let's get all these other analysis out of the way for a second. What we're dealing with is we had a downward channel in high yield bonds. We broke out of that downward channel, indicating a bullish breakout, which for a channel meant we were meant to go substantially higher. The market went higher, high yield bonds didn't. In fact, when the bullish open range on Monday the 2nd said markets are going higher, high yield bonds didn't. They've been going flat and in fact down. So this is a very interesting factor, and as you can see, we're curling over, which possibly means we're building a head and shoulders pattern. Here's the left shoulder. Then we come up, reverse, possibly making a smaller little left shoulder. We've gone up and came back. It's starting to pull back. So what this means is we could have a head and shoulder that comes down to there, then back up to there, completing this little mini head and shoulder top. Okay. And then a breakdown from there to there. Okay. A rally up to here, and then we'd be looking at a pretty significant breakdown. So this area here, which would come right towards October, if we get a downward movement, sharp downward movement here in the next few days, that which is quite possible, at least in high yield bonds, the market may not follow, but high yield bonds, if they break down to here, bounce back up to the end of next week when open range ends, and then we break further. This is a big sell signal, big sell-off signal for shorting the market right here. If we then bounce and rally back up, that will be a great sell signal to short the market there, or not the market, but short the weak stocks in the market, which of course is much better than just shorting the market itself. So this is the possible play that may end up happening in high yield bonds. What that means is that smart money is selling off corporate debt. They don't believe in corporations' ability to pay their debt back. And of course, right now, leverage is at all-time highs in the US market. And some areas of leverage are higher than pre-2008. So this is stuff that you should be worried about. Now, if we also look at the short-term pattern on the high-yield bonds, what's building within this larger term pattern, you can see we've got a rising wedge. And if you measure this rising wedge, There we go. Let's do that. Okay. There's our measurement of the rising wedge. You can see that where we're breaking down from right now is exactly where the head and shoulders I just pointed out would be in the short term. So that the target of the rising wedge is the same as the target of this possible head and shoulder neckline that I just illustrated. So we're dealing with a few different confirming factors. So once again, if this were a head and shoulder, we then also measure the distance from the head to the neckline, duplicate that beneath, and look, that's exactly where the head and shoulder would break down to, is where the support line is. So it's eerie how well this seems to be working, and that's why we definitely want to be prepared. Now, if we bounce back up and if we go above 88.80, and we push higher, great. Market's going higher. That is broken, and manipulations come in. Fantastic. We'll keep partying to the bullish side, but I would be very, very careful, because even if we do that, we're still getting toppy. But this is the scary stuff that I'm looking at right now. Okay, so that's that. Now let's move on to having a look at some of the setups. Obviously, in terms of the long side, really happy with PMTS. This has had a huge rally. Obviously hitting as I mentioned in the trading tonight, this is a short-term profit-taking target here that we're at right now. Nothing wrong with potentially taking some profit off the table here. We could go higher. We could push up to this resistance around 180, 167. We're in the area of resistance now, so keep an eye on this, but certainly already a beautiful move with this powering up 13% today. BW, also my other favorite from today. I'm in both of these, by the way. I have a personal position in both of these. BW broke out, was up 4.8% today. This one is looking strong, looking stable. No big erratic movement like the previous one. So I'm just going to let this thing do its job and just keep protecting the entry point of this morning at $4 with a stop loss as it rallies up. I won't be raising it yet. I want to see it make some ground and allow the moving averages to push up. But so far, so good. Looking really strong. On the short side, the recent shorts we alerted you to have also are looking really good. ECOL obviously is breaking down beautifully, continuing its drop from when we alerted you to that a few days ago. Again, it's part of a upward channel that has been formed for quite a long time. So again, looking for that to drop at least down towards this 47.50 area. So check, that's doing great. The next one, MYOK. This one hasn't triggered yet. We're just waiting for it to drop through this support line. But this one so far is looking really good. It just needs to break, but not triggered yet. We've got Hilton H. Which we talked about buying some puts on last night. Again, that's closed bearishly today. So far, so good. So those are all looking very good. A couple of new ones I wanted to show you for the short side. Firstly, IMGN. Now, this had a bunch of insiders that bought way back in November, right before this huge rally. Now, the same insiders that bought before this huge increase are selling now. And if you have a look at the smart money indicator, you can see it's been diverging this entire time. That's a good sign for the shorts. So if this breaks down below 611, I'd be looking at a first initial target of at least 507, protect the entry point, maybe take a partial profit. But second target would be 417, and that's even higher than where the actual target would be. So 417 second target. I'd give this some room to begin with, because this is certainly a sharp sell-off zone right above this area. So I'd just throw the stop criteria above it at 690. Excuse me. I'd look at just a little bit below it actually, and that comes from the hourly chart. If we just zoom in a little bit. There we go. You can see that we did clear some key support here. And look at the volume really as a telltale sign. As we broke down through that support level, volume did pick up. So we could probably get away with 693, and that's above the 50-hour moving average, which we rejected off on that candle. So that's important, and it's also where we broke down from. If we just take these other ones off and just focus on the 50-hour, it's where we broke down from. It's where we, in terms of the descent beginning, it's where we rallied from back here. And it is also where we broke down from there. So the 50-hour moving average seems to be pertinent to this stock. And that's where you look at personalities and where stock has its personality in particular. It's currently at 682 now. So 693 should give it that room we need, hopefully. Um, Now the puts on this could be interesting. The $6 January puts are 85 cents, and if you want to go a little bit more out of the money, the $5 puts are 30 cents. So take a look at that. The other one is MGM Grand. And again, look at that divergence in the money flow coming straight out of the stock. Now, once again, CEO selling his own stock. I think it's about close to 30% of his own stock he's been selling. We've just now broken through all the moving averages, and it seems we've also broken through the horizontal level. The low here was $30.04. So, and if we look at the weekly chart, you'll see the 50-week moving average is at 29.94. So hey, let's let it break that. So if it can break 29.73, I'd be looking at a target of 26.23, possibly lower. And you could look at the $27 January puts, for example, which is 74 cents. And in terms of a stop criteria, once again, I would be looking at just above here. 31.44 is where I'd be looking at a stop criteria. Now, if the market gets some strength tomorrow, I'll give you two that you can keep your eye on. These are kind of things you may need to watch intraday because they are very aggressive, and you need to kind of watch for the shift in direction. SRNE, which has got a FDA approval date set, I believe, of the 28th of February next year, is some analysts are expecting a possible 1,000% increase if they get approved. That's like $2 to $20. Obviously, this stock has been there before, and so you never know. This could be a big push. Now, what you'll notice is that there is this level of support is pretty critical. We go all the way back to there. Now zoom in. You can see this area where we basically got support at 318, where we closed today 320, as well as the gap down happened right here. Right? There's a cluster of support that may be able to give this another shot up. So it's something which is a high risk setup for that reason. I mean, I'd probably want to have a stop loss around 277 and just let the thing rip, let it go. So it's a high risk trade, it's a speculative trade. And would not therefore put as much money into it or much money into it. So that's kind of the way I would approach that. Of course, it's more of a speculative, long-term possible play. But one other way to do that without taking capital risk and just knowing exactly how much you've got at risk is just to buy some calls. For example, the $2.50 March 2018 calls, which is after when we're expected to have the FDA news, are $1.30. So that may not be an interesting way to play it to get a bit of speculation, and there's plenty of volume in those options at the moment. So again, that may be a better way to speculate. Again, I'm not here to give you advice, just ideas. And of course, options, and if you buy an option like that, expect to potentially lose 100% of what you put in. But if it blows up, then you make some significant cash. So there you go. I'd be looking at that as a possible speculative entry tomorrow. You just watch to see if it bounces off of here, and you could get an entry now. You can get an entry waiting for the bounce. Again, if you look at the 15-minute chart, you'll see that we haven't really quite bounced yet. We're just sitting on this support zone of around $3. We bounced up into this 320 zone. So I mean, if we can start to break through, and the smart money indicator can turn up and make a new high above 5%, we're probably good. So keep an eye on that one. Of course, if you were to more of wanted to have a more aggressive stop, you could also look at a stop right below the low of that turning point if it turns from here. So, I mean, these are not your average swing trade. So, the ones we've talked about so far, and the ones I started tonight by talking about more of the typical type of thing. These are the aggressive fun trades. So, the other one to keep your eye on, of course, is CRMD. It pulled back today to support, so we'll be looking for a possible bounce for that tomorrow as a potential entry point. And certainly, if we break above 80 cents, we could have another stab at an entry point there. So these all have some. Again, both more speculative on the speculative end of of the stock market, but wanted to give you a couple of long ideas there if you're looking for some trading opportunities tomorrow. Lower probability because both have pulled back, so you're going counter trend. But in both scenarios, the volume on the downtrend is substantially less than the previous volume the day before on the way up. So it's a natural pullback. The main thing you're looking for in the morning is, does it stop there? Does it stay there? And if it starts to bounce, you've got a possible trade there. So, ladies and gentlemen, that of course is the executive summary tonight. And once again, as I mentioned in the trading room this evening, the we do have a few spots left in the advanced trading course, which is where we will be teaching fallen angels, advanced flags setups, inverse fallen angels, capturing the crash, all of these kind of strategies which we began Acorn with 10 years ago. We're a few weeks away from our 10-year anniversary, so we're going to celebrate it the way we began, teaching our favorite stuff. And it involves the package. The few spots we have left involve one-on-one training, weekly mastermind meetings with me, the whole kit and caboodle. So there's a few spots left under that package. So act now, and if if you haven't let us know with your interest, do it very quickly because again we have more people applying than we do have spots left, and we will be offering those in the order that we receive them in terms of applications. So again, shoot an email off to me if you want to get some info on that. And again, once they're gone because it is one-on-one time we're giving away, and that is quite limited. So acornwealthcorp.com. There it is. Just shoot me an email. And for those of you who have already been enrolling over the last week and a half, I'm very excited to start. Launch date is November 8th. And of course, either way, have a very happy trading tomorrow. And I hope you've found some insight with these ideas. Take care.